Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning Yang Berhormat, Yang Berbahagia, Tan Sri Tan Sri, Datuk-Datuk, Datin-Datin, distinguished guests, Sunrise Board of Directors, management team of the Group and Khazanah Nasional Berhad, esteemed panelists, speakers, and participants. It is my great pleasure to welcome you to the Sunrise Real Estate Forum 2024. Today, we are not just here as members of the real estate industry, but as leaders, innovators, who will shape the future of Malaysia's cities. This forum is a chance for us to explore opportunities in our industry and also to take a close look at the financial health that support its growth. As a start, I would like to go back in history to look at how our economy in the past has been influenced by events beyond our borders. I've seen so many people from the past. I've done this many times before where I ask the audience to look at your life and how you, and to the younger audience, how your parents have been affected by all these events. Chances are your career and therefore your wealth, whether property or stock markets or your saving, are a product of these world events. So think about it as I do this, reflect your life, where were you in those years? And maybe later on you can explain that further in your forum. So we need to recognize that decisions made in Washington, D.C., in London, in Tokyo, and in Beijing have had a huge impact of our countries to the point where we even lost our independence in the past. As far back as 600 years ago, when the Ming Dynasty made the decision to withdraw from this region, eventually led us to being colonized by the Portuguese. These global forces can quickly lead to both economic growth and destruction and downturns. 40 years ago, just as recent as 40 years ago, when I finished my high school in 1985, we were in really economic crisis due to the collapse of demand for commodities. Think about it, where were you in 1985? And many of my seniors came back without a job. Some may remember during this period, especially the old guards in this hall, in November 1985, the Pan L stock markets collapsed. Remember the Pan L? Tan Kun Swan? The Pan L crisis led to the unprecedented closure of the Singapore and Kuala Lumpur stock exchanges for 3 days. Luckily, during the same year, Plaza Accord was signed. You can Google that Plaza Accord or ChatGPT, which greatly impacted Malaysia's industrial landscape and by extension, our real estate sector. The Plaza Accord, as many of you know, was an agreement among the 5 largest economies at that time. James Baker, the US Treasury Secretary, wanted to solve the huge US trade deficit with Japan and Germany by lowering the value of the US dollar against other major currencies, especially the Japanese yen. So this major event led to a surge of foreign investment in Malaysia and other ASEAN countries, where we became the Japanese offshore supply chain centers. And then the Iraq War in 1991. I was in the US then. Led to Federal Reserve having to bring down US interest rate by almost 500 basis points from 8% to 3%, hence triggering an inflow of US money looking for carry to this part of the world. I remember that by that time I finished college in 1990, our GDP was as high as 10%. Google that. Hence, we experienced the roaring 90s due to a combination of the US low interest rates and Japanese firms looking for cheaper cost of productions. The economic boom of the 1990s transformed areas like Shah Alam, Penang, Johor Bahru, and even my hometown in Malacca into the industrial and residential hubs as we know today. This influx of foreign investment and its spillover into various sectors, including real estate, created considerable wealth for Malaysians. For example, from 1990 to 2011, Malaysia's GDP per capita increased by fourfold. House prices tripled, and the Bursa Property Index rose by about 30%. However, this period of prosperity did not last, as the flow of foreign investment normalized and Malaysia went through two other major economic shocks, the Asian financial crisis in 1998 and the global financial crisis in 2008. The real estate sector faced regulatory changes aimed at balancing the supply and demand. In 2010s, policies like stricter lending measures, increased foreign purchase threshold, and a 50 basis point increase in our OPR in 2014 helped to moderate the market. And the taper tantrum also happened in 2013. The announcement of the US Federal Reserve that it would begin tapering its quantitative easing program led to a widespread sell-off in emerging market assets, including our ringgit, which depreciated by 10 to 15%. So this event and measures, combined with foreign capital, especially the China's OBOR, then known as One Belt, One Road initiative, driving more real estate development, especially in Johor, contributed to an oversupply and drop in demand in areas like Iskandar. As a result, the real estate sector shifted from generating wealth to losing value, creating a challenging situation for everyone involved. So take a quick look at how this affected different groups. For property owners, over the last 5 years, property prices in Malaysia only rose by 1.8% annually, below 2%. This is lower than the 10-year average of about 4.5%. For property developers, company performance remained weak, with the return on asset for the Bursa Property Index, which includes listed property developers, standing at 1.7% at the end of 2023, down from a peak of 6.2% in 2012. Obviously, ROE is slightly higher, but not much higher. Developers also facing significant oversupply of apartment and condominiums in the 500,000 to 1 million range. For shareholders, total shareholders' return over the last 10 years for the Bursa Property Index have been a mere 0.34% annually. Obviously, the last 1 year has been exceptional, where the property index has delivered a 64% return. It is still 30% below its 10-year peak in 2014. For Malaysian homeowners, the average house price in Malaysia is about 460,000, with monthly mortgage repayments of 2,000. As a result, most Malaysian homes are out of reach for the average citizen. Additionally, Malaysia's household debt to GDP ratio is high, with 90% at the end of 2021, and 58% of that tied to housing loans. Thankfully, nothing lasts forever. Malaysia now has an opportunity due to global shift in supply chain and US companies reshoring their operation from China and Chinese companies diversifying outside of China. In fact, I can say that almost every week, I would have a dinner or meeting with investors from China over the last few months. So the real estate industry could experience another boom, both residential and industrial, as a result of this new wave of foreign investment. I believe we could seize this opportunity. It could be the boost that we need to realize the vision Iskandar Putri of becoming the Shenzhens of Southeast Asia, a term that we have used loosely over the last 15 years since the launch of Iskandar Putri in 2006. However, we must approach this with caution and ask some tough questions about how this investment can benefit Malaysia without leading to an unsustainable oversupply driven by foreign capital. At a national level, Malaysia should aim to increase economic complexity by partnering with foreign investors that help us produce more unique and high-value products like semiconductors rather than turning us into just a hotel economy. At industry level, financial sustainability requires coordination between the government, shareholders, developers, and Malaysians who need homes and business spaces. With this in mind, today's forum will explore these challenges in depth. Each session is designed to address the key issues shaping our industry's future. In session 1, we look at the market landscape, growth drivers and trends, discussing how global economic changes and demographic shifts are influencing our market. In session 2, we'll focus on capital availability, questioning whether Malaysia is still an attractive destination for real estate investment. In session 3, we'll assess whether Iskandar Malaysia is truly ready to meet investor demands and succeed in the long term. In session 4, Faiz Akbar, Sunrise urban designer, will explore how visionary ideas can be turned into reality, focusing on the concept of form to future. And in session 5, we'll discuss navigating sustainably in Iskandar Putri data centers, a sector where growth must be balanced with environment responsibility. And finally, in session 6, our fireside chat will provocatively ask, why now? What is different this time in relation to Iskandar Malaysia's readiness to fulfill its potential as a regional powerhouse? I hope this forum will engage with these tough questions and other issues that may come out as we work to balance affordability and profitability in the real estate sector. As a trained engineer, mathematically, I've always struggled to think of how all of us could balance all these competing needs and expectations for all stakeholders and economic sectors in this industry. And this balance is crucial to ensure a vibrant real estate industry in Malaysia that benefits everyone involved. Finally, on behalf of Sunrise, thank you all for being here today. With that, I officiate the Sunrise Real Estate Forum 2024. I wish you a fruitful and engaging day ahead. May the exchange of knowledge and ideas benefit each and every one of you. Thank you. Assalamualaikum warahmatullahi wabarakatuh.